So today we're going to break down a video from Everything Money, and we're going to be divvying out points. We want you guys to play along here. Put your own points in the comments below. Let's compare scorecards at the end of this. Do it on YouTube, and then we'll have the conversation on Discord.
We do have a Tesla channel. Go ahead and start just nailing into these guys if you want.
The video will be posted there, and this will start a conversation. We have over 100 people in the Discord now, and I know this is going to generate a really cool conversation. This was originally an idea that Warren had.
Well, in fact, play the clip.
What did I just do? There was this channel where these guys are like value investors, and they
the money,
everything money.
Yes.
They did this video where they're talking about, and it's just so painful watching their video. You guys should look for some of their videos, because they got a group of guys talking. So you two talking about those guys, because your analysis was really good and your demeanor was really good. Number one, I think you guys are more diplomatic than I am, and your back and forth is an interesting way of covering a video. So I think that might be something we're seeing. I think that could be a good angle for your channel if you wanted to try it.
Well, I mean,
the video you did about me and Ben was really good.
These guys are so negative on so many growth stocks that we invest in, like, for example, Tesla and NEO.
Yeah.
I mean, even Microsoft, I think they're a little negative on.
We're going to throw some points today, Vitaly. Let's give out some points.
Check, please.
Hey, welcome back to Everything Money. One of the most highly controversial topics we talk about on our show for the past 3 years has been Tesla, this amazing car company. This is a car company that I own. Mo owns one. I've had 2 Teslas. Paul, you have one on order. We love the product, not so much the stock price, and people have argued with this relentlessly. We're going to go over today's Tesla's fourth quarter earnings. We're going to bring you some numbers and Paul's thoughts as a successful value investor on this amazing company that we certainly think is overpriced. But if you'd like to hear us out, I'm going to bring Paul some arguments that some of our fans have been bringing to us as well. So Paul, take it away on Tesla and their earnings.
Thank you, Seth. Guys, first off, 2 things I need you to do very quickly. Follow us on Instagram, Everything Money Investing, and follow our 3 personal accounts. It helps us feel really good about ourselves. So Tesla. This is going to go down as the fanboy of the 2016 to 2022 market bubble, or however long it lasts. This is it. Like, I get more young, inexperienced people telling me what I'm missing and not once bringing up metrics that actually work over a long period of time. This is the one.
Who also don't own the product or have ever used it.
Yeah, that doesn't bother me so much.
Oh, okay. I just thought that's always so weird.
Yeah, it doesn't matter to me. If somebody,
no one's actually driving them.
If somebody had a dildo company that I don't use, I'm still going to be able to value it.
But
right?
there are companies you do use.
Keep going.
Yes, correct.
That was funny.
Gary Mashuris, good friend, manages a small amount of money for me, but also he just wrote his annual report. And in it, he brought up his article about he teaches a value investing class, a kid in his class who chose to take a value investing class, wrote him an email after he talked about Tesla, where he wrote a long email explaining to Gary how he was.
I don't know about you, but like, investing is not like a martial art. I think you and I both just kind of look for good deals, or we try to invest in industries that we know about, right? I'm not trying to invest in industries or things that I can't understand myself.
Me and you are not value investors, by the way. We are growth investors. Yeah. We are thinking about that 5 years from now that this company is going to be bigger than it is today. These guys are not thinking that way. They're looking at the metrics right now. Do the metrics make sense for the price I'm paying for the company? Which could make sense. I'm not saying it doesn't. But when someone is growing 80% compounded, and we'll go to their points, they're not actually predicting that Tesla will grow 50% plus.
You rank a company like a Tesla based on standard metrics, and you see, oh my God, the fair market value price of Tesla should be $40, yet it's trading at $800. So you have to factor that in, that doesn't seem to matter as much. There's something else that seems to matter more that's driving the price. And if you're just simply a value investor looking at those metrics and you say, oh, it's overvalued, and you skip it, you and I both know that Tesla is the investment of this decade, probably the century, in terms of potential growth company-wise.
They're going to miss it. They're not going to get it. They're going to miss it.
They're going to miss it, and they're telling their audience to basically not buy Tesla because it should be $40. An example of what I'm talking about is Zoom. So this was around the start of the pandemic, and it basically shot up from $112 to $573 over the course of 196 days. And now
406% increase. Amazing.
And then it proceeded to tank. Now we're back at $107 and it's lost 81% of its value. Now, what changed was investor sentiment towards it, or the current market environment where we all had to work from home and people felt like it was going to the moon. Now that we're reopening again and mandates are going away, the appeal for a company like Zoom is what it was before the pandemic. based on their metrics, it should have been valued at a certain price. Yet some other events drove it up. And if you're just looking at those metrics and thinking that any company that's well over its fair value is not a buy, you could be missing out on some amazing.
Okay, I see what you're saying. So basically the 400% run, these guys would never get because it's always overvalued. I know you can say it's crashing right now, just like you're pointing out, but somebody made 400%. Somebody was smart enough to actually sell a little bit at the top. Yeah. Maybe it's not me and you, but there's somebody out there smart enough to do that.
Put options on them.
Who chose to take a value investing class, wrote him an email after he talked about Tesla, where he wrote a long email explaining to Gary how he was missing it on Tesla, but didn't bring up any reasonable valuation metrics. Just said, it's the technology, it's the future, it's all this. This is going to be the epitome of, I think, what's going to end up being a major, oh my God, you remember Tesla fell 90%. Okay, now I want to bring up some examples here. Let's go to our 8 pillars software. There's 2 companies I'm going to talk about. Intel.
I'm going to stop here for a second. So the whole point of their channel is also to pitch their software. I think Tom Nash keeps mentioning that they're just trying to sell you some BS stock software analysis tool. The thing is, I don't mind them making money. I just don't mind that. That's not the issue. The issue is that don't talk negatively about stocks that you don't even follow, you don't even track, you don't know the fundamentals of.
Let's go to our 8 pillars software. There's 2 companies I'm going to talk about, Intel and Cisco. These were the fanboy companies of 2000, the tech boom of 2000.
Intel, baby.
You could not miss on Intel buying it here. Guys, that was 22 years ago. It has not touched that price since. At the end of the day, in the long run, what matters is what's behind the company. Let's go to Cisco. This was a company that you can go Google.
Remember, he's buying Intel. Just want to make this clear. He's talked about other episodes where he's buying it.
Okay.
Articles about people saying this is going to be the first $1 trillion company. Look at Cisco. Has not touched that price since 2000. And guys, they're even around still. You don't even know all the companies that didn't even stick around. I do think Tesla will be around 20 years from now. I do think they don't spend any money on marketing, but people still love them. Great experience in the car. I love being in Seth's Tesla. I love being in the backseat of Seth's Tesla with Seth.
Yes.
And all these things. Steve. And guess what? Something's going to happen. Tesla's going to fall big time. If you think I'm wrong, okay, it hasn't fallen yet. I get that. But if there's 100 Tesla investments with exactly the same parameters, you're going to lose a lot of money at some point. I'm sorry to say that, but it's just, this is a car company. For people who say it's not a car company, what is it then? A software business? How much is their revenue from software?
Tesla is going to drop 90% and provides no data or any facts as to why. And then he says,
because it's a car company,
it's a car company
only.
And it's just this. And if it's not a car company, then what is it?
What is it? Tell me now.
Tesla is an ETF of multiple companies around energy. And they are an AI company, and their product looks like a car to you, but it's actually a sentient robot on wheels that is connected to the internet.
Tesla does all these other things that they're small parts of the business. The batteries they're creating, nobody's considering that that's a business. They're considering, oh, that's part of the car, right?
Yeah.
They're not thinking that's a business. That's an energy business to make batteries like that, to bring the cost lower for their product, which is one thing, which is a car. So I think they're just misvaluing it, even though they know the parts of a Tesla. It's not like they're idiots. They understand that Tesla makes batteries. They understand these things.
They must fully understand that the gasoline that goes in the car is a separate industry than the car itself.
They don't.
So it's like,
no, they think it's all one thing.
Right, they think it's all one thing. But we understand that Exxon is one company and Ford is another company.
Wait, the points, if we just, I think the points are obvious. It's 1-0 for me.
It is 1-0 us.
Us. It's 1-0 us.
1-0 us.
As a big fat 0%.
Exxon right now is trading at $84 with a market cap of $356 billion and a current dividend of 4%.
Okay, so $356 billion, one oil company.
They clearly understand that there's a difference between the energy business that provides the energy for the cars to move when it's an ICE vehicle, but they do not understand that the batteries themselves are the gas. And there's a lot of other things you can do with those batteries.
Grid storage. Welcome grid storage, which is happening slowly. I mean, Elon has said numerous times that this business will be as big, if not bigger, than the car business. So let's say the car business, they're right, is worth only $1 trillion. That's it. Forget about it. We're going to discount everything else. That means we have another $1 trillion on top of this. So what is my failing point? That this is worth $2 trillion minimum? If Elon's right, we have a minimum 2.5x. Okay, that's the minimum. The minimum is possible that in my brain is this is a 2 to 3x just with this energy part and just with the car part.
What's the revenue from software? Tell me. That's the thing. It's a car business. And guess what? Every car company in the world is doing EV now. Bentley just announced they want to be 100% EV by a certain date. Bentley. Ferrari will be 100% EV at some point. All these big macho car companies that are all big on, I got a 12-cylinder, they're all going to be EV at some point. Now, does Tesla have great technology in their car? Absolutely. Do they have great software in the car? Absolutely. But until they're generating money purely from the software, and Mo brought up a good point. Mo said Peloton is more of a software business than Tesla, because Peloton, you can sell, you can buy the software and apply it to other areas.
I think we can
That burned a
stop
lot
it. I think we can stop it for another. He's sort of a caricature right now.
Seriously, Arcimoto's gonna sleep Peloton, like gone. Oh
No, but that
God.
was funny. Peloton is more of a software business than Tesla.
That's the quote of.
Oh, that's the quote of the century, man. That's
seriously, guys, come on. You can't possibly believe that.
2 points for us.
Me too.
They're comparing Ferrari and Bentleys to what Elon is trying to do.
Yeah.
He's going for the people should be able to afford these EVs completely. That's what he's going for eventually, right?
Right.
Comparing it to Bentley, Bentley's not going for the same market. And even if Bentley gets an EV, it's never going to compete at all with Tesla. Okay, Ford themselves have a hard time competing with Tesla. So I don't know why he's talking about Bentley and Ferrari. Makes no sense.
Just because Bentley makes the cars, does that mean the demand's going to be greater? Just because Ferrari makes one, does that mean it's going to be greater? Ford is making EVs. They're not selling as many as Tesla's selling. Tesla is sold out for like a year and a half. What he's saying is they're switching to EV, and that means they're going to take market share from Tesla. But a Tesla EV is not the same as an EV from another company. Educated consumers are actually waiting for the Tesla. If what he was saying is true, why does Tesla have a waiting list if there's other EVs that they could go buy right now? So you lost the point.
Well, we're taking away. It's
Yeah,
a
I'm
negative.
taking a
It's
point
negative one.
because
Okay, I
I'm
agree
taking
with
a
you.
point because that's not a logical argument. You got to come with something better than that to the freelance.
It's even worse than that because everybody keeps saying the competition is coming. The competition is coming.
The competition's
The
here, guys.
competition is coming.
They're here.
And I'm not saying there's never going to be anyone who you don't want to buy their other car. Like Neo, I like the Neo car. I keep saying it. But to compare what Tesla has done with their autopilot, what they're doing with autonomy, with their energy business, to just being a car, that's the fallacy here, right? That any car company can just come in.
Yeah.
The second fallacy is comparing it to a Peloton. It's an exercise bike. I mean, like, you're ignoring Dojo, all of the machine learning, the AI, like all the things they're doing, the machine vision. Like, are you crazy? Like, you're not even making any sense at this point. I have to take away another
FSD
point.
beta is not as advanced as the software in a Peloton.
Basically.
If we keep talking about this, they're going to lose another point. So
No.
I'm gonna take it
That is
down.
a whole different thing. Minus 2 points for me.
Oh, so you're taking 2 points away. Okay.
Yeah, those are two different fallacies they said in like in 10 seconds.
Yes. Just to be clear, the first reason you lose a point is the assumption that just because other car makers are making EVs, it means that they're going to sell or take market share from Tesla. The second one is saying that Tesla's software, the software that's in the car, and the FSD beta is not as advanced as the software in a Peloton. Ridiculous.
I think this shows their real lack of understanding and really like fundamental analysis here. This is not just like, we're not into the numbers yet, just fundamentally they don't get it.
They don't know what Tesla is. And now they're going to take their thesis as if it's a fact, and they're going to build on this. And this is the problem that I already have with this video. They're building on a terrible premise.
Peloton is more of a software business than Tesla, because Peloton, you can buy the software and apply it to other areas of
That burned a lot of people's asses because most you can at least take the Peloton app and go wherever you want and use it.
And on a different device. You don't have to have it on a Peloton bike. You can use it on another bike.
And people say you're nuts for that.
We're nuts.
There is some semantic.
I had to stop it here again. Are they making a case to buy Peloton?
No, what he's saying is that it's so advanced that you don't even need to use it just on the one device. You can move it via your phone and use it on another Peloton, Vitaly.
A different Peloton, right? But he's saying like maybe we should be investing in Peloton because that's the what's the ticker right now of Peloton?
It's POOP. This is the company that they think is the technology. It's a software company or a technology company that's
with their software.
The fans of this, they definitely use the concept that this is a software company.
All right, so you know why they say that stuff? Just like in 2000, technology companies can generate income so much faster. They can change so much faster. That's why they were justified. They're changing the world. It's whatever excuse you need to justify your values. Now, there will be a time when Tesla's stock is falling precipitously like crazy. The company revenue is going up, profits going up, and they'll be saying why it's going to end because people react to the stock price, not to the fundamentals. That's all that's going to happen. That's all. Just like Microsoft in 2011 and 12, it's a dead company, Paul. If they're dead, why is their revenue going up 8% a year and their profits going up 11% a year, year in, year out? How is that dead? How is that? That's like telling me, Paul, you have a heart problem and I have no cholesterol, which is not possible. I have it doesn't make any sense whatsoever.
What they're saying now is very accurate. I'm giving them 1 point, by the way. If the stock price is falling precipitously, as he said, people will run out the door, as we've seen this whole year. They will run out the door. Everyone says Tesla's going to always be $1,000, $900. It's never going lower, never going lower. That's not necessarily true. People stop looking at the fundamentals at the point where the stock is falling. That's when it totally does not matter.
And I can agree with that. What he's saying is not false. For me, where that falls apart is if you're going to compare Microsoft to Tesla, okay, you're right. And we've seen this happen on earnings calls. You have a blowout quarter, the stock tanks the next day. Why? Okay, that's something that happens with investors. Maybe it was baked in. But the big difference between Microsoft and Tesla is that Microsoft does not have a clear trajectory in the future of hit products that can be catalysts to pump the stock. Whereas Tesla, we already know Cybertruck is coming. We know Roadster's coming. We know the semi's coming. We know the Tesla bot is coming. We know FSD is coming. We know robo-taxis are coming. So he's right. These companies fall. But look at the companies he's picking. Intel, Cisco, Microsoft. There's software technology companies. It's not the same as a nice, sexy Roadster that can do 0 to 60 in 2 seconds.
First of all, he's getting half a point for me. So can you add that?
Oh, you're gonna give him half a point. So he's minus 1 point.
Not a whole point. He would have gotten a whole point, but you made a good point that I adjusted because he's correct. If a stock is falling precipitously, people are going to run out the door, no matter what stock it is. But point 2 is Microsoft wasn't growing at 80% compound.
Another point, yeah.
That is the main thing. Just like you said, all of these businesses are forming and they're growing. So if Microsoft was still growing 80% compounded, I don't think it would have had such a massive drop and then stagnation.
Right.
Intel had the same thing, stagnation.
Right.
If they stop growing over 50% and go down to like a normal, like a PayPal, if Tesla says that same thing, that we're not compounding at 50% plus, if they ever say that in an earnings call, I expect a nosedive. But that's not what's being said. He's ignoring once again. Elon talks and nobody listens. That's the point.
I think eventually all of these growth companies will become value companies. Like eventually Tesla will reach a saturation point. You could argue that Apple is not really a growth company anymore. Once Apple stopped reporting the number of units sold per quarter and only reported the income, that to me is the point when they went from a growth company to a value play. And that's the trajectory on any company that's in an S curve. So Microsoft and Apple, a lot of those technology companies from the 80s, they were riding the wave of Internet 1.0. And we never had a product like Microsoft Word and a suite like they had. We never had that. Now we had that. It was the solution we needed. There was never a need to improve upon it. So now they're just selling copies of Microsoft Office. The same thing will happen with Tesla. When everybody that wants a Y has a Y, when there's plenty of 3s on the road and Tesla's making enough to do this robo-taxi thing, Tesla sales aren't going to matter as much, like number of units. It's just going to matter how much money are you making. And I think he's missing that point, that you're looking at a growth company that will eventually become a value company. And to their point, yeah, you want to be in those value companies, but don't you want to be in them before they're a value company? Like, wouldn't you want to take 10,000 of your dollars and go to 2004 and throw it in Apple then? He's saying to buy it now.
The 8 pillars in our software.
Yeah, people say we avoid the facts, Paul. So, for example, let's just get after some so I can fill you in. So, they made 300,000 cars in quarter 4. They had their best year, 0.94 million cars.
There's a lot of companies that are going to have their best year and they're still overpriced, and that's Tesla.
Up 87%.
No, by the way, I'm not missing the facts. You're missing the interpretation. We're disconnecting on the interpretation of the facts. Like if I said to you right now, you're an idiot. Some of you will be so pissed at me that you'll write me letters and you'll sit there and probably put me on some hit list. Others of you laugh about it. It's all our reaction to what we see. You interpret those facts of record years and say, guys, remember, they still make 1/10 the cars that every other manufacturer out there makes, wherever the number is. And they're worth 20 times those manufacturers, 10 times those manufacturers.
Okay, let's stop it
That's
right there.
the fact you are missing.
Let's stop it right there. He's taking it there. We're talking about Tesla as a company. If you're comparing them to the other companies, overall, ICE vehicle sales are down. They're blaming it on chip shortages and supply chain shortages, but we know that the demand for ICE vehicles is going down. So if you're comparing it to that, then you have to, in your model, you have to also account for why there are less ICE vehicles being sold right now. And you also have to account for why they all feel the need to switch to EV. So comparing this, saying that they only make a small percentage of the cars that are produced in the world right now is criticizing a baby for crawling before it could walk.
Well, remember, the value investor mindset is if we're valuing you now for what you're going to do 5 years from now, there's no money to be made in it. That's the value investor's mindset. Like I'm saying, if he could be right, if Tesla came out and said, we are not growing, and I said, we are growing, the fundamentals do change for us. But he's ignoring, just like you mentioned, ICE is going down. We know the S curve for electric vehicles is literally at the beginning of the S curve.
The very beginning. I got to give us a point. I'm not going to take points from them. I'm going to give us a point because I feel like his interpretation, if he's making a deal about interpretation, I feel he's interpreting the core business of Tesla incorrectly. the core metrics to measure Tesla on incorrectly and comparing them to other companies that are failing and using that as a case for why Tesla will is also incorrect.
Yeah, I'll take away only half a point because it's not fully negative in terms of like he has some good points in his statement. He's just ignoring a lot of fundamentals that we keep discussing. As a value investor, I would hope that he would be more about the fundamentals, but in a lot of growth stocks, he's not. He doesn't really care about what's happening on the back end. And we're only talking about the car business here. We're only talking about the 20 million vehicles 2030. We're not talking about the energy business once again, full self-driving. I'm ignoring all that for now.
Okay, so you are now, you have 2 points for us, -2 for them. I'm at 3 points for us, -1 for them.
Tesla is going to be one of the biggest car companies in the world, I truly believe. That doesn't mean I pay $1 trillion for the company.
Well, I do like the concept, Paul. We laugh sometimes. You take things to extreme, whether it's jokes or insulting people or looking at numbers. And you do say something like, okay, so Tesla was at $1,200, $900. It's been split a couple times, but why not pay $4,000 for it? Or why not the market cap? The market cap's $1 trillion. Why not pay $3? When does it stop? And at that point, this is where you have to sort of bring in the numbers. So there's this dichotomy, Paul. The people overlook numbers when they talk about what's coming ahead. The robots.
I guarantee, Seth, if I'd set it at $100 a share, which I was saying, hey, what about at $1,000? Is that too much? I guarantee a lot of Tesla fanboys out there right now would have been like, no, that's too much. But now that it's there, it's justifiable. Just like if Tesla went to $3,000 a share, right now, if I sat there and said $3,000 a share, you'd be like, no, that's too much. But if it got there, you would figure out a way to justify $3,000 a share.
Oh, is that how it goes?
100% is how it goes. It goes every single time that way. We just figure out a way to justify our criteria, our assessment of something. The same can be said about me, right? Well, Paul, fine. The difference is mine's very consistent. You tell me, I love Microsoft as a company. I hated the current stock price. Make it $100 a share. Oh my lordy, all day long. Alibaba, I didn't buy Alibaba not because it's overpriced, because I didn't trust China and the numbers. Charlie Munger trusted China and the numbers. I was all in. I'm like, great, I trust it. Same company, but I got a different interpretation of the fact of the data out there. Okay, great. But what you're doing is you're not interpreting the data correctly, and you might end up being right on this one by pure luck, which will be the worst thing that happens to you.
Yeah.
Because being right one time, it's like the gambler who hits it big. Oh, see, I knew it. Gambling's awesome. I'm so good at this. And it caused them how many losses along the way.
Yeah, this is the guy that after...
He does have good advice in bad advice. It's like all mixed together. Mm-hmm. He's right that there's a lot of companies out there that are growth companies that everybody's betting on, thinking it's going to the moon, with no similar fundamentals to Tesla. I'm separating out Tesla from, I won't even say it because we'll have to talk.
Palantir.
Oh, Palantir. We should leave that in. Sonny, that's for you. Amit, that's for you.
That's what I thought you were going to say. But...
No, I was actually going to go to Lemonade.
Oh, man. Oh, dude.
Sorry, Joe.
Patreon.
But fine, I'll compare it. I'll compare it, honestly. Let's compare it to something real. I own Lemonade, and I have Tesla stock. I know Lemonade is a gamble. I'm literally throwing the dice. He's right about that point. I'm throwing the dice. That hopefully in a year or two, Lemonade can turn the ship around, be profitable. Tesla's not turning any ship around. The ship is a rocket ship, and we're off to the moon. And if you want to get on board, you're allowed to. And if you don't want to get
to the moon,
it's a starship. But if you don't want to get on board, you don't get on board. Oh, I think they lost half a point again because it's mixed in with like good information, right? So it's hard.
But that's what I think is so sneaky about it, because he's giving good advice, but his overall thesis is just flawed. When the moment he said it's just a car company, you've lost the right to speak about Tesla, because you just fundamentally don't understand them as a company. So everything you say after that is flawed because you're looking at them as just a car company. You tell me how Tesla stock is going to stay even at 700 when the Cybertruck is released, when Giga Berlin comes online, when Giga Texas comes online, when the Roadster comes out.
He's not incorporating that into his model, by the way. So he's not saying Cybertruck will sell 1 million vehicles a year or 300,000 vehicles, whatever the number is. He's looking at the current data.
Yeah.
Value investors do that, but then don't be analyzing Tesla because it's not the value play of the Warren Buffett value play of picking up nickels as you're walking along, whatever his
statement is. And it's also not the traditional growth company.
Cigarette butts. Warren said, like, we just pick up the used cigarette butts because there's still a smoke in it. Right. You know what I mean?
Isn't that what we're doing with Tesla? That's what I'm saying. We were doing the same thing. We were picking up the cigarette.
But 3 years ago, we were like, okay.
People were laughing at us buying Tesla. People were laughing at Tesla as a company and Elon. They were thinking it's going to go bankrupt. None of that happened.
Right. So, and this guy missed a 1520X. Absolutely.
Oh, yeah. He missed all that out. And so in the same, I'd like to see him justify that. I'd like to see him try to justify that. The only way you're going to retire early and make real money in the stock market is by having thousands and thousands of % returns on some stocks. That's what you need. And the only way to do that is to buy good quality companies and hold them for a long time, or you have a massive share count, right? That's the only way to do it. And so I don't see how you get to their insane returns if you're selling out of something like a Tesla after a 2x.
I'll give us half a point, take away another half a point from them.
Tally is no joke today, boy.
Just because they do have truth in their statements. Yeah. It's just mixed up with everything else. So
the flop comes out, says I should have held on to 2-4 because the full house
and 2-4 will win every so often. But at the end of the day, 2-4 will beat pocket aces every so often. At the end of the day, though, I'd rather have pocket aces every single time.
And that's what you'd like to bet on, the kings and aces, right?
Intel. I just want to say.
Oh, I bet on 2s and 4s.
Oh, that's right. Okay, so
all right, so let's go to our 8 pillars tool, guys. So let's go to 8 pillars, Tesla, and there'll be more about the 8 pillars. What we're starting to do now on our software and videos is we're not going through every single individual step. There'll be more on that at the end of the video on how you can get the 8 pillars information to get more of an understanding of the 8 pillars. We're just gonna go through it now. All right, guys, so this is our 8 pillars. First things I'm gonna do, I always look at market cap and dividends. $900 billion market cap, no dividend. Not a shock. By the way, look at the free cash flow. In the last 12 months, it did $2.6 billion in free cash flow. The last 5-year average was negative $222 million. Okay, so go to the 8 pillars tab. That's a lot of red, guys. All right. 5-year PE is NA and 5-year free cash flow is NA because they had
every single video, these certain things that they look at, these metrics.
Metrics, yeah.
And if you look at a company like Tesla that just became profitable 2 years ago, and you're looking at the past 5 years, all your data is completely screwed. You can't look back on a company like Tesla 5 years ago. They were bleeding money. Now we know that they're making money hand over fist. So what's 5 years from now? They're not actually doing that calculation.
What they're trying to do is hack the stock market and say, if you look at these 8 pillars, it's going to tell you whether it's a good bet or not. You don't even need to think.
It's fine if you look at the 8 pillars for a stock like Intel, perfect example again, or Microsoft. They have this long history of consistency that happens. So you can say, what's the 5-year average PE ratio?
Yeah.
Are you crazy? For Tesla, it was like, there was no PE for like 3 out of those 5 years. So what are you doing? Like right away, like you should be like, I shouldn't look at this number. This is not going to work.
This is Amazon, okay? Yeah. From inception. To their point, look, it was $5.25, shot up to $100. So it 20x'd in like, what, 2 years? And then it essentially retraced. But after that, since April 1st of 2001, Amazon has been doing nothing but go on a tear. 7,400 days, up 63,800%. That's how you retire early, guys.
Okay, can you go to the top of Amazon? Let's say you were the worst trader in the world.
Oh, okay, from here?
And you bought it at the top.
Okay, so if you were the guy in January of 2000 and you bought it at a peak of $110, it took you 3,500 days. It took a minute. But from that point, if you would have bought that at the peak, you'd still be up 3,800%.
So, right, this is the point that Tesla can absolutely retrace. In fact, I've been saying, even on the Discord, that I wouldn't be surprised to see $600,
$600,
maybe even $500 Tesla. Like, I wouldn't be shocked. When people run out the door, this is when he's right. Who buys the shares? Somebody's always on the other side of the trade. The one who has high conviction. Right? So when it goes to 600 and goes to 500, I'm happy to take your shares because my objective is that Amazon objective.
All right. So for that, I give us a point.
Yes, 1 point for us.
Shares outstanding, guys. This is a silent killer. They've increased their shares outstanding by 28.7%. There are 2 ways to finance a business: debt and equity. They've done a lot through equity, issuing shares. That's diluting you as an owner. You are getting a smaller and smaller piece of the company. If a company has 10 shares outstanding, you own one of them. You own 10% of the business. If they issue 2 more shares, you now own 1 out of 12 shares, 8.33%. You went from 10% to 8.33. They've increased their shares from 10 to 12 to 12.9. So you're diluted about 30%. They have cash flow growth.
They're right that when a company does that, it's bad, usually. But we know why Tesla did this, to build the factories, to build the vehicles and the batteries that we want people to buy. Now it's going to be 1 million vehicles from that one factory. That investment of diluting me has made me 10x. Moving forward, they're not looking at the forward. Tesla's not diluting us anymore because they print money now. They are making money. They don't even know what to do with all the money. In fact, so much that they don't know what to do. People are discussing when the dividend is coming.
When the dividend's coming, exactly. They have the highest gross margins of any automaker right now, and they still have room to make even more with their pricing. Same thing. I'm just not taking points from them, but I'm giving us 4. So I have us 4 to -1.
Oh, you're not giving them anything for being half right at all?
No, because it's like the example that he gave about the gambler. You go in there, you gamble, you throw a bunch of money and you win, you can suddenly think that this is easy. It's misleading to try to use his metrics to value a company like Tesla. So although it is good advice, the way he's trying to use it, it's going to lead you to the wrong conclusions. about Tesla and Tesla stock, and for that, I can't give him a point.
I agree. And that's really the issue. If you follow his advice sort of just blindly, you will never get a good investment. You will never have that 10x, that 100x. It's just never going to happen for you. 100x's don't come on a piece of paper when you look 5 years back. It just doesn't happen that way.
Which I certainly hope so. Revenue growth is huge, and net income growth is huge. Those are very good positives, guys. But at the end of the day, you can overpay for growth. Why not $100 trillion then if they're going to be the best car company in the world? You might sit there and say, Paul, it's ridiculous. I don't think it's that much more ridiculous. I know it sounds insane to say. That's not much more ridiculous.
That is ridiculous. I'm not going to do the point thing here, but it's 100 trillion and a trillion. We already have companies that are $1 trillion. I mean, it's not ridiculous.
Yeah. Again, he's taking it to the extreme. We're not saying it's 100 trillion. We're just saying that it's going to be 3. But he's pretending like we're saying, oh, it's going to be 100 trillion. He's defending a point that like no one's making.
Well, Warren.
Well, even Warren, the bull of all bulls, is like 16 trillion.
Yeah. Warren, respond to this video.
Take these guys
do your
down
own
for
response.
us.
Look at this. Biggest ratio. Price to sales ratio, 19. Let's say hypothetically it's a software business. Price to sales is a very common metric. Let's look at some software businesses and see how their price to sales ratio is. Microsoft, remember, still an overpriced market. 12.6 versus 19 for Tesla. Okay. And by the way, Microsoft's margin, 68.8%, bottom line of 38%. They make more to the bottom line after taxes than Tesla makes per car. Think about that for a second. After all their overhead, everything's paid for, Microsoft makes more money as a percentage of their revenue than Tesla makes on per car before any of their overhead, any of their salaries, and anything like that. So, Microsoft. Let's go to Google. What's their 8.3 times sales? Also, 30% bottom line profit margin. Tesla's at 23% gross margin before paying all the overhead. This is what I'm saying, guys. You want to talk about I'm missing the facts? Please, if you really think I'm missing the facts here and I'm not getting it, I am begging you. I'm absolutely begging you. Sell your Tesla stock. Donate the money to some charity. It'll do much more in the world than the money you're going to lose along the way. At least get the tax write-off. Please do it. You are absolutely stupid if you believe that I'm missing the facts on this.
Is he talking to me?
I think we're effing stupid.
Talking to me?
This is what's so sort of deceiving about his argument, because he has so much real data. He has a point about Google being at a price of sales of 8. Yeah, but maybe Google's undervalued. They're growing 30%. Microsoft at a 12 price of sales. Okay, they're also growing around 30% this past year. And before that, it was lower. But we're now talking about Tesla growing at 80%, 50% plus. You're literally saying the company's almost doubling every year. Almost. Microsoft and Google, this is where he's not giving you all the information, okay? Microsoft and Google, let's face it, they're 30-year-old companies. Tesla, even though it's not a startup, they're in the trajectory that is like shooting off to space, as we keep talking about. All of these fundamentals are being ignored because, once again, if you look at the facts and the price of sales is 20 and it's $1 trillion car company, it just sounds bad.
You should do some research to see, well, maybe I'm missing something. Why is Tesla's price to sales at 20? Well, maybe because they're selling $75,000 vehicles and they're not selling a copy of Microsoft Office. The businesses are completely separate and they're not related. Tesla, it's not just a software company. It's not just a hardware company. It's not just an AI company. And this is why I think his whole models are falling apart. But instead of looking into the reasons why so many retail investors and now institutions are piling into this company, he's just dismissing it. And that, I think, does a fundamental disservice to his audience.
He's ignoring on purpose, I feel, because I think he's a smart guy. There's no way he's not a smart guy, all right? He's ignoring two things. One, Microsoft and Google have had their S-curve rise. We already went through that. Yes. If you were around, you would have seen their 10, 20, 30 X's. Yeah. It happened. Tesla is in the beginning of changing the whole world. Maybe we're a step into the S-curve, but we're not far into it where the whole world has changed. What is EVs? 2% of the population of the world, or the United States? Maybe.
Right, penetration of the whole world.
You're talking about there's like 98% left of the market. Microsoft has taken over the market, okay? At least half of the software is Microsoft's at this point. Yeah. Not half the vehicles and not half the energy is battery storage and the cars and all that. And autonomy doesn't even exist in any real way anywhere. So he's totally discounting the actual curve that we're on because it's just not important enough for the value investor. Because how do you value something like that? How do you say that, oh, we're at this part of the curve? We're not actually here. It's impossible even for me.
The fact that they can do software updates over the air, for example, that is a software, a technology that they have and they pretty much perfected. By doing so, how much money do you think they've saved by not having to have people come to service centers. That software is saving them money that other companies may have to spend. Not all software advantages are going to show up in sales. They're not factoring
That's a great point.
You know
Yeah, no, it's a great point because Ford needs your car at the Ford station. You have to bring it in. And just to point out the software part, one, he's ignoring the fact that I personally right now pay $100 a year for like the data.
Yeah.
That's a software business that's starting. Full self-driving, although it's just beginning. Let's say I'm even saying it won't work 100%. Fine. They're still going to charge you $200 to $300 to do some sort of amount of this per month, which will get bigger and better as the time goes on. He's ignoring that whole thing. And number three, I think there was infotainment. They're doing a whole gaming thing now and bringing in the Steam store. You think they're not going to get back end on any of this stuff? Of course they're getting back end. So you're going to be buying apps just like you do with your iPhone. So there's all these things that aren't being priced in. And even I can't price it. I have no idea what that's going to be worth. But to say it's worth nothing is also lunacy.
And what other car company is going to have anything to compete with that anytime soon?
Oh, yeah. It's so far away. It's insane.
You know what I'm saying? So again, a lot of his arguments are falling apart. And I think he's revealing his biases the longer this goes on.
Yeah. 1-0. Well, add a point for me. Whatever that is.
I'm adding a point. We're at 5. Let's see if they can. They got to get 1 point on this. They got it.
I'm trying to give him half
Ben
points.
Sullivan's got a couple of points.
Eve,
what was that?
If you believe, not just a Tesla investor.
Yeah, if you believe this. You're absolutely stupid, and I feel bad for you. Please write everything bad about me down below.
-1 point. You called us stupid, buddy. That's not the way to get to your audience.
Actually, no,
that's why we keep going
in
back.
boxing, a low blow is a 2-point deduction, so I'm taking 2 points.
Because when it does come down, I am going to look at you on YouTube and say, you deserve to be broke. I'm so glad you are broke and poor because you should not have money. You are the exact opposite of having, you are allergic to money. You have no idea what you're doing. And I wish awful things upon you financially because that's how you will learn.
That's how you will learn. Right. Paul.
I guess I'll stop it for a minute. I mean, it feels like it's getting personal.
He just bought a put option on his audience. He's basically saying, I'm gonna say I told you so. You can't say that to people. You deserve to be broke. I hope something bad happens to you financially. That's another 2-point deduction. So they're in the
another 2 points.
That's a low blow.
I already took off a point. I'll take off half a point.
I would never look. I would never wish. I would never wish that on somebody.
Yeah, I'm not sure who his audience is, but look, I personally watch it. I don't get offended, obviously. It's like, whatever. He's a YouTuber at the end of the day, just like we are. He's probably trying to incite the audience to like watch more of his content because he is interesting to watch. I'm going to tell you're really good, man. Like, you're interesting to watch. And the fact that he does this, he's so animated about this, even though he's dead wrong, is amazing. I took off half.
Okay, half. Okay. I got to admit, you were a little harsher on Warren and...
Warren did call. Those are some serious charges Warren made in this video.
This guy just called you stupid. He said you are.
That's true.
He said you are stupid. You deserve to lose your money because that's how you'll learn.
That's it. Take off a full point. No, none of this half stuff.
Paul, break it down to just, my 11-year-old will not wake up for school. We got him a brand new alarm and he turns it off.
Yeah.
And I said, tomorrow, it's your life. It's your life. You wake up, you get dressed. I'm not going to drive you to school in that Tesla. You got to walk your ass down in the cold to the bus. And he's gotta learn because we've been coddling him forever to the point where where his whole delivery, we wake him up, I sponge bathe him, I'm just joking, and then we hand deliver to him in a warm Tesla to school. I'm like, at some point I look at my wife, the coddling, my wife who coddles him as much as I do. It's like, he's got to, it's your life.
What do you say?
Well, he got up today. Well, I'll keep you. But that's right, Paul. It sounds harsh, but we're not gonna learn.
I say it in a very harsh way.
Yes.
Warren Buffett would say it more like, listen, at the end of the day, you buy pride, blah, blah, blah. And sometime in the future, maybe you'll learn a lesson here, but it'll be great for you, me. No, you don't deserve to have money. You're stupid. You are stupid. You are absolutely stupid. And I hope to God, I pray to the Lord, Jesus Christ, my Savior above, that you lose lots of money.
Because at that point, when this system works of following fandom, which it has been, Paul, I'm wrong. I was going to say entire YouTube channels. The most successful financial YouTubers made a huge bet after an okay life. I'm learning like more and more facts. They made a bet on Tesla, and now they're experts because they made it.
Yep.
They caught one big fish, and now they're the best fishermen in the world.
Let's go to the stock analyzer tool, Seth, because I want to show how ridiculous this is. But it won't matter. If you believe that I'm wrong still.
Nobody really understood what Amazon really was. They thought it was just a bookstore. Remember this. That's what they thought Amazon was. It's a bookstore. It's so overvalued. It's basically...
And Barnes & Noble will come along and wipe them clean.
All Barnes & Nobles has to do is make a website and they'll compete. Fast forward to today.
Is there a Barnes & Noble on every block like there used to be?
There you go. What they're saying is that all the growth has already happened, and the only companies that you can invest in are companies that had their all-time high in 2000. Good.
And in fact, he wants you to be in pain and lose everything. So forget about the points for this one. Just wanted to elaborate a little bit, you know?
Yeah.
On here and tell you you're wrong and you're not going to believe it. But let's go to our stock analyzer tool.
Oh,
This
back
has
to
been
the
so
tool.
popular with our users, and more on the software in a little bit about how you can get it.
He has like 3 different columns where he estimates his own belief what the stock should be worth. This is going to be very fascinating because he's going to put what Tesla should grow at and end its valuation at. So let's watch. This is fascinating.
Because it tells people we don't know the future, but we know every investment the president.
Well, no, he does know the future.
Right. No, his tool for $39.99 or whatever that costs, you too can know the future.
Value of all future cash flow. Or as you morons who think out there who like Tesla and think it's reasonably priced, the every investment is just what your 18-year-old neighbor's son, this 18-year-old son of your neighbor, says about Tesla, because he's obviously right.
But Paul, they're gonna do.
He just lost to Virginia last week.
They're gonna do the 25K car. Oh wait, I'm sorry, they're pausing that. The truck, no, they're not doing that either. The Roadster, they can't make that. But they're gonna make the robots. That's all coming, and full self-driving is gonna be better than humans.
For the record, I love Teslas. I love Seth Tesla. I love Elon Musk. I just hate the value.
The value. It's just a value.
So if Tesla's around for 10 years, I think it will be. Let's do some revenue growth numbers. Look at this, 90% over the last 10 years because they were nothing 10 years ago. Let's do 20, 30, and 40%. Profit margin, 6, 8, and 10. By the way, no, I think there's only one.
So I really want to already point out the fallacy. So just to be clear, this is revenue growth. He has a low estimate, he has a mid estimate, and he has a high estimate.
That's like a bear, a base, and a bull.
6, 8, and 10. By the way, no, I think there's only one car company with 10% profit margin. But I'm sorry, software business, I forgot. Free cash flow, I'm gonna do the same thing. 6, 8, and 10. PE. This is where everybody's gonna argue with me. I'm gonna go insane. I'm gonna go 20, 30, and 40. And you might think I'm insanely low for that. God, I hope awful things happen to you.
Now, I'm seeing this, Paul, and you have to digest this for me, or at least explain it to me, of course. Automotive gross margin of 30.6%.
Automotive gross margin? That's good.
Automotive gross margin of 30.6%. This pushes them past being just a car.
No, it doesn't.
Operating margin of 14.7.
Sick. Go look at the software business out there that are software businesses. Their gross margins are 70%, 80%, not 30. What is Tesla's software margin? This is a trick question, folks.
Oh.
There is no software margin. They don't sell software. They are.
Once again, value investor cannot extrapolate anything fundamental that they're doing out to the next year, to the following year. It can't be counted. So I get what he's saying, that you can't count something that doesn't exist technically.
Some of their software doesn't translate directly to sales. It doesn't fit into a nice, neat little box for him, and so he discounts everything. He's making these like little jokes about, oh, no, but it's a software company. Like that right there is a lot of what Ben did. That is what reveals what you really think of the company. So to me, he already has a certain negative conclusion he's drawn about Tesla. That is a filter that he's seeing it through. So he's not being objective in and of himself, which is weird because you're using software that's supposed to be objective and give you something, some hard metrics to base your data on.
He's putting his own numbers into not what Elon has said, what we've heard in earning calls. He's using his own numbers. So we'll go to the numbers in a second, but this is the main issue. He's actually not using the current data that we have on Tesla.
There is no software margin. They don't sell software. They are not a software business. Stop with this.
It's entertaining.
This is exactly the point. You morons.
They don't sell software.
They don't sell software. They sell awesome cars and really solar panels.
Hold on.
I mean, I don't know that, but I heard good things about them.
Hold on.
You want to pause on this? Okay.
Hold on. Okay. Is PayPal a software business?
Yes.
Do they sell you software?
No.
The Cash App? These are software businesses. They're not selling you software.
Tesla does not have a line item that says, this is how much money we make on all our software that we're selling. Mm-hmm. And to your point, they don't do that because, one, for FSD is not ready. But when you buy Tesla, autopilot is included. You're buying the whole computer, right? With Microsoft Windows on it, if I'm going to call it that.
Right. And how do you factor in, right? And if people are buying it for that software feature, how do you factor that in if all you see is the number of sales of the car? They're in the software business. They're selling you, like you said, they're selling you their software pre-installed on this rolling chassis. That's really what it is.
They're selling you a robot where you can sit on top of its head.
Basically.
I do want to give them credit for certain things. Software companies themselves do have higher margins in terms of it's like 60, 70, 80% margins because they're literally just giving you bits, right?
Yeah.
Tesla has 40% margins, but he's ignoring He's ignoring the bits. He's just counting the hardware part of it. So if you're just watching this as someone learning about the Tesla business, you would think he has great numbers. That is some great information. He's just not giving you all the information.
I don't think that their overall thesis is correct. I don't think the way that they're breaking it down, the metrics that they're using to arrive to their conclusions are correct. And at the end of the day, I also think that they're coming at it with a bias.
They have a massive bias, which is weird because they own Tesla supposedly. So you chose this robot on wheels that you're on basically.
Right.
But the fact is you spent the $50,000, $60,000, $70,000 on the thing.
Right.
So
You could have bought a Mach-E.
the stock price benefited from you buying it. So it's a weird situation. It's like people who use WhatsApp and Facebook. I'm not going to mention any names here, but it's people who use that. And then I think that person right behind you.
Okay, if you guys agree with us, please hit the like button and the subscribe button so we can get this video out and we can reach out to those guys and hopefully get them on the show.
And put in the comments exactly like, do they have any good points? Do they have any bad points? Don't just SHIT all over them for no reason. Let's hear the points, all right? And one other thing, we do have a Patreon. Please, guys, take a look at it. It's $1 to join right now. That's going to be going away soon. So I want everybody to take a good look at this. If you've been thinking about it, about helping us, $1 to start. $4.20 if you really just want to be like, I love these guys. These guys are the bomb.
You really love us, you're at the $4.20 level.
Software, they're not a software business. You know, my friend Gary would be like, well, you know, by the way, Manish Prabhai in our interview was kind of like, listen, I don't know if Tesla's that overpriced. Sorry, Manish, I disagree wholeheartedly. It's insanely overpriced. No, I agree with you wholeheartedly. It's not just a little overpriced, it's insanely overpriced.
By the way, he's getting to all of this before he actually goes over his software tool, because his software tool shows prices. So he's already made that decision long ago before he even went to his own thing that he's pitching to everybody, okay?
God, this is going to go down really bad if this company becomes a $10 trillion company.
Well, that's not really the point. I mean, I guess I have to
that's not the
myself,
point.
it's not the point. It's like if you take this same process of investing and keep applying it over and over, that's why when Paul says if you took 100 Teslas, if you keep this overvaluation process, you look at the numbers and then not so much, and then ignore the numbers on future possibilities. At no point have I ever, I see a lot of Tesla videos of the fanboys and they just, at no point are they not going to make the robots. It's the robots are happening, the cars are happening, even when they literally announced that they're not going to make.
By the way, when Elon Musk in the last 5 years said they were 2 weeks away from bankruptcy 2 or 3 times.
I think we're far away from that.
We are, but the whole point is like, guys, you guys didn't realize that back then. And you guys are still touting the stock. You were touting the stock before he even said that.
That's right.
And he literally said we were 2 weeks away from bankruptcy at least twice.
So I owned 140 shares of Tesla at one point of a company that was literally admitting they were almost bankrupt.
Yes, twice within 2 weeks.
Oh, okay. So, well, let's respond and then count the money, not the money he lost.
What they're missing is that people like us that are invested in the company now fully expect or know that the price to sales and price to earnings is ridiculous, but we expect it to compress over time as the market cap increases. They're expecting the price to sales and earnings to drop in conjunction with a stock price dropping. And what I'm saying is we can have both. The stock price will continue to go up, the market cap will continue to go up, and the price to sales and price to earnings will compress. This is what they're doing. When Gordon Johnson comes on the TV and says, Tesla's losing market share, they had 87%, now they have 60. Guess what? They can still be selling more vehicles and having a greater penetration while losing market share. Because inherently, if they've sold 100% of the vehicles, they have 100% market share. Any one person sells one other vehicle, now they don't have 100% market share. So market share
while the market is growing.
The market's growing, so they have 67% now of a larger market. It's still a bigger number at the end of the day, units sold, than having an 80% market share with the 0.5% penetration. This is what I think they're missing. Or they're purposefully conflating the facts to line up with their thesis.
95% of the ICE vehicles will disappear in 10 years. Someone has to start taking a big part of that.
Yeah.
They're not thinking that Tesla's that company at the end of the day.
What are the profit margins that GM and Ford and all these other legacy automakers are enjoying on their EVs versus what Tesla is? These are companies who make most of their money servicing ICE vehicles that they sell either at very low or even at a loss and make that money up in service. I'm giving us another point. They have not made a point that I can actually agree with here.
Right.
Logically.
They're still in the negative.
I can't agree with anything of what they're saying because there's all this spin on it.
He mentioned I had 140 shares. There was a 5-to-1 split, 700 shares. So 700 times, what's the current price? 840, fine, 840. So he missed out on $588,000.
I'm not going to take advice from somebody called that company so wrong. the $588,000. I want to know what you put your money in. What value stocks did you put your money in? And did the returns in the same amount of time come anywhere close to what would have happened if you just kept your money in Tesla? If you don't have that, you have no basis to be speaking about Tesla as a bad investment because you messed up the investment. And for all of us that were invested at the same time, we're sitting on huge returns. And no matter what happens to Tesla stock, we're all in the green.
Massive. Tesla would have to drop 99% at this point.
For us to be in the negative.
For us to actually probably break even.
This is ridiculous. This is why I say, like, you just admitted that you called it right and bailed on it because of your thesis. So your info, your intel, your great insight told you Tesla is a sell, and then the thing skyrocketed. So now you're saying that you're right? Now you're right. But the last time, did you go on and admit you were wrong?
Oh, it's always just easy to say you're right when we're at a peak. Yeah. So at $1,200, me and you knew it was going down, right? Like, it wasn't a hard bet that this needs to come down a bit because when you go on parabolic runs, you have to come down.
Institutions coming in make much bigger bets, and they also have more responsibility to sell out at a lower profit point because they need to lock in profits. They also have stop losses where they have to protect their money in ways that are different from guys like you and me. That volatility is opportunity for us.
This is a generational company that I do not want to miss like I missed most of Apple. I don't want to be the same person I was 10 years ago. I've learned my lesson. Okay,
missed Apple,
I was a value investor.
Facebook, missed Amazon, missed Microsoft, missed a lot of them.
Because and any point in all of those good companies, you could have said, oh, it doubled and tripled and quadrupled. Maybe I should get out. And every single time you were wrong. You know, these guys could be right for a couple of years. There's nothing to say that we're not in a downturn for a year or two.
Even if they're right with what happens to the stock price, the way that they're arriving to that is fundamentally flawed.
Oh yeah,
so
absolutely.
It doesn't matter. So they're the guys who'll be right by luck.
They're not even using their own tool before they made this analysis.
I'm just sitting there saying, we look at investments. There's processes. And the best investors of all time, their biggest errors are from omission, which means they missed something because it didn't make sense to them. But that same omission avoided how many strikeouts? That same omission, they're not going to hit the grand slam. They're going to get a lot of singles, doubles, and triples. I'm okay missing the grand slam home run because you know what? I'm also the guy that knew that I had to strike out 20 times in order to get that grand slam. And instead of striking out 20 times, I had to get on base. The Buffalo Bills were probably one of the best teams of the 90s, if not the best team, but they lost 4 Super Bowls in a row. So the question you have to ask yourself is, those people, the same argument made with LeBron James. Oh, he lost so many finals. Yeah, but he got to 1 billion finals.
False equivalence. That's a false equivalence.
False equivalence. There you go. That's the term. You can't compare someone playing football or basketball. What was he talking about? I don't even know.
First he started with football at the Buffalo Bills, were the greatest team, but they still lost the Super Bowls. And then LeBron James was a great player, but he lost a bunch of finals. Yeah. Okay.
Right. Tesla said we're growing 80% this year, and they said we're going to do minimum 50%. That's all. I mean, the facts say, at least for this year, you're wrong, so you shouldn't be making these assumptions this year. Why don't you wait till your assumptions go in line with what you're talking about? Yeah, why not? One more point for us.
All right, so we're going to give a point. I'm actually going to take a point away from them because at this point, it's so clear that they have a bias that all of their points that they're making are just showing more and more and more of their bias, and that's why I just think they're going to keep losing.
Yeah, and the false equivalence thing we've discussed.
It's not.
You can't compare these things.
Yeah. Well, he compares them to Ford when it's convenient to say that they're a car company, but then compares them to Apple when he's trying to say that they're not a software company. So, Come on, man. This is what people said about Apple. And then they came out with the iPhone, one product, and they built a massive, massive business off that, an app store, and they're still making money.
20 years later, they're almost $3 trillion.
Exactly. So at the end of the day, if you follow their advice, you might not lose money, but you ain't making any money.
That's what I wanted to say as well, because he says, I like to get on base, but he's not hitting a home run.
He's not making money.
It's not happening.
He's not making money. He's protecting his investment. Even if he's got $1 million portfolio, he probably put $800,000 in there, sitting on 20% upside on Intel.
Well, he's sitting on Intel, right? Making a 4% dividend that's being destroyed by inflation.
Right.
And the stock is nowhere near its all-time highs even. So we still have to wait for that moment.
Right.
I'm okay missing out on the Tesla, but I will tell you this. If you value every company, if you look at every company the way you look at Tesla, which is about hype and all this stuff, you will lose a lot of money.
Let me show you some numbers here I finally found, because sometimes it's kind of hard. So in 2021, Tesla will likely sell about 100K full self-driving upgrades. So let's wrap our minds around this. They made 1 million cars. So I guess they're saying 10% are going to upgrade to the $10,000 package, which just got raised to $12,000. So in my Tesla app, I can go and just buy it right now.
Yeah.
I can upgrade my car. They flip a switch, and now I'm full self-driving, at least beta mode. Now, this has been falling of late. So apparently, In 2019, 37% of people got full self-driving.
Just want to point out that this sounds like a software product.
So they're because the percentage is not what it was. What we should be talking about is how many of these cars out there are paying $10,000 to $12,000 each, and how much revenue is that? Bottom line.
Let's assume 10 million vehicles a year. 5% is 500,000 vehicles that will be sold with full self-driving. Right. At that point, we could probably assume it's 15,000. Let's just do that, even if it's more.
Right.
Times 15,000. Let's see. What is that? Hold on. $7.5 billion for a non-software company. 7.5 billion actually divided by 53.8 billion times 100. That's 15% of the revenue now coming from full self-driving, even if it's not a full success.
Well, I would also expect that the percentage of people ordering full self-driving will go down as the price goes up. There's less people that have 50,000 disposable income than have 10,000. So as the number of cars increases, as the price of FSD goes up, there's going to be less people that can afford it.
Big fleets like Uber and Lyft will start ordering massive amounts of vehicles with full self-driving, if that's a real thing, what we're talking about. So I'm not even getting into that Uber bull case, because we know if that happens, like me and you are billionaires.
Well, actually, that's a good point. What would be the revenue on the 100,000 cars that Hertz ordered if every single one of them had FSD at $12,000?
That's 1.2 billion, if I'm not mistaken. Yes, 1.2 billion.
Right. So they're going to make 1.2 billion if they get all 100,000 of those cars served right now.
There's a lot of issues here with their actual fundamental analysis, once again, because they don't know enough about the company. It always goes back to that. They think they do because they hear about it on the news, but it's just something like my parents. They have no clue. They know what a Tesla is, of course, but they don't know anything else besides the fact that it's an electric vehicle, right?
Yeah. I'm taking a point away because I think that again, they're showing all of this metrics on software while saying it's not a software company. And so I'm giving us a point because I think we made our point, and I think there's a lot of fallacies in the way that they're proving their point. So they lose a point for the argument that they made, and we get a point for ours.
I'm just getting a point for myself here, but the reason I'm not taking anything away is because, once again, they are using like facts in between, like this narrative that they're weaving that doesn't have all of the fundamental stuff that we know. So I'm still getting value from some things they're saying.
They're just making me more bullish.
Yeah, I'm buying Tesla.
I know. I want to buy some call options now.
I mean, this is the hill you're going to die on, baby. This Tesla.
Listen, it's this whole hill I've been die on. Tesla's been a big one, but it's Bitcoin. It's a lot of the things in this market, and I'm going to be wrong on some of these because, well, actually, maybe not. Because look at the internet age. What internet company didn't fall big time?
All of them?
All of them did. Now, they ended up, some of them rebounded, but they all fell.
This is what he's ignoring. Some of them rebounded. And now he's going to go to Amazon. So let's listen to this.
Fell 95% from 2000 peak to 2002.
And the people don't get this comment, Paul.
95% from 113 a share down to 6.
They still say that, yeah, but if I would have bought Amazon, but the point is,
you wouldn't have kept Amazon.
You would have been buying Cisco, Intel, and Amazon by
you would have sold them as they were falling.
Yeah, so it's not about so much the exact company you bought that has since skyrocketed. It is just the process of looking at a company and saying what it's worth. And so you would have...
Okay, so they're so stuck on their process that they're missing the, what do we calculate? 3,000, 4,000% gain, even at the peak of Amazon.
Another company came in and fundamentally disrupted the industry in the 90s, and that company was Amazon. The argument we're making is that company is Tesla today, okay? They are on a trajectory to continue to sell more vehicles, introduce more products, expand production, and expand out into their software business. This is where they're going now. They have plenty of money. There's no risk of bankruptcy. They can't make the cars fast enough. Where is this headwind that they're running into? Other car companies, they're already selling vehicles now. The CEO of Ford basically admitted it. Tesla's going to win. The CEO of Volkswagen is saying Tesla is the one to catch up here.
Yeah, but Ford actually said, we hope to be number 2, I think, in 2026 or something like that. So that he knows Tesla's number 1.
This is what I'm saying. So the competition that he thinks is going to eat Tesla's lunch is telling the markets, the best we can do is number 2. This is a race for number 2. And number 1 and number 2 are a huge gap between them, but still they're going for the number 2.
Yeah, who's that second search engine?
Right. Ask Jeeves.
But it keeps going up.
Wait, hold on. Did we miss it? He has to hit the analyze tool. Hold on. No, we got to see this analyze tool. That's the whole point. Oh, no, hold on. Is that it? Where the is the analyze tool, dude?
He never hit it. He never hit the button.
We got to talk about this. What we've been waiting for all along. At the end of the day, if you're using your stock analyze tool, you got to hit the button to analyze the company. And look, so if you guys see, look behind him, the analyze button has never actually been hit. So we don't even have his like BS and valuation for Tesla because he just already, in his head, he already had a valuation that it's not worth hitting that button.
Right. If you want to see these guys come on the show, I want to see them hit the analyze button, and I want to be there to see the results. Help us get this video out. Hit like, hit subscribe, share it with your friends on the Discord or on Reddit, whatever it is. We'll hit them up on Twitter and see if they'll come on this show and actually hit the analyze button.
I mean, because the fact that they didn't hit the button, it's 5 points to me. And minus 2 points, I think, at least to them, because like you got to hit the button, right? Am I wrong in this?
You do, but man, you have a very. I need to read the terms and conditions of your point giving thing. So okay, you gave yourself.
Well, hold on. If the whole video we watched was for the reason to see the valuation, like really the whole
Look
point.
how upset Vitaly is because you didn't hit the button.
That's the point.
Yeah.
Like hit the button.
Yeah. Freelancer Finance gets 5, and what do you do with their points?
Minus 2 points.
Minus
you got to hit
2.
the button, dude. It's a 7-point spread because you didn't hit the button.
I'm gonna give ourselves 2 points for 9 total because just 1 for you, 1 for me. For them, I'm gonna take away 2 points because again, that's a low blow. I don't mind you being bearish on Tesla. I don't have any personal stake in it. I'm doing what I gotta do. So the more bearish you are, that just tells me that I can keep on buying. But when you frame an argument, especially when you're saying it's supposed to be like unbiased and objective, and it's clearly not unbiased and objective, I think you're doing a disservice to the audience, and I got to take some points for that.
I don't know. It's uncalled for. It's unnecessary, and we saw it. We stopped it almost 3 or 4 times. Like they just kept they're just calling us idiots.
Yeah.
And it very well could be the be-all and end-all for car business. It very well could be the number one car, and someday it could be selling for $3,000 a share 20 years from now. And if you swear to Almighty God, if you come to me and say, Paul, look, you were wrong, I will end your life.
Okay, we're going to go full.
Because it's going to go from $1,000 a share to something a lot lower before it goes to $3,000.
Fine.
But
what is wrong with that? Does everything have to go straight to the moon?
I'm taking another point away because what he's.
You got to take a point. Yeah, I'm taking a point off away. I mean, why does everything have to just go straight in a line up? We're talking about Tesla.
I don't have all the money in one place at one time that I want to invest in this company. These dips are great for a person like me to get more shares. But now you're saying that if we come back and you were wrong, and we tell you
and it's going to 3,000 eventually,
and you even say it's going to 3,000, you're gonna try to end my life. I'm just like,
he's coming after you.
Try to end my life. Really?
Listen, I come across as arrogant. I come across as I get it completely. I understand it completely. I'd probably hate me if I were somebody else. But at the end of the day, for me, this is just so obvious. And I'm going to be wrong. I've been wrong for 5 years. Some moron, Tom Nash, says, how does this guy not make money in the last 5 years? Well, Tom, how are you so stupid? You lost 80% of your money on Palantir. I didn't lose 80%.
Zero's better than 8 minus 80.
Yeah, zero's better than minus 80. Thank you very much, moron. Of course it is. And it's going to be a lot worse for you. And I'm so happy.
Anyone else you'd like to address?
Meet Kevin. Nice hair, dude.
Meet Kevin's having a rough month.
He shaved it now?
You're reveling in other people's losses. Look, up until this point, I was giving them some sort of credit, benefit of the doubt, but I think you're a little bit salty, and now you have to come up with a reason why it wasn't a good investment to begin with. And what you're doing is what you're accusing Tesla investors of doing, where you've already have the conclusion and you're working backwards from there.
I know what he invested in. He bought Intel. One of the things hasn't done. He bought Alibaba. Alibaba's down 66%, by the way. But you're also down a lot. You're not talking about that investment. So it's not only Palantir that's down, it's anything that's down.
Right. And before you're going to go make fun of Tom Nash, that's not necessary. We don't need that. Okay. Because actually right now we're all bleeding.
He's giving you terrible advice if you're actually following any of his advice, because he's telling you not to buy on the dip. He's literally saying, do not buy the dip.
And he's saying, go into value stocks right now. So go and throw all your money into Intel right now because they're going to do what?
They're going to give you 4%. That's what they're going to give you.
Right. But then if that's the point, there's better dividend stocks to do this. So I just don't get it, right? If you're saying put the money into Intel, they've been flat, their all-time high was 20 years ago, and you think that's a great investment to invest in right now, okay? Okay, great. If it's for the dividend, there's other dividend stocks. So we're not making any money growth-wise in Intel. We're not expecting any. And we're also, if it's the dividend, there's other companies to invest in that are more stable, that you can get that dividend.
Yeah, there's a dividend and growth.
I can't reverse engineer your logic based on the stock picks and the stock picks that you are saying are a buy and the ones you're saying are a sell. I can't find any logic in there.
Tesla has horrific numbers when you go back 5 years and you do an average of a P. It doesn't make any sense. So if he's from that premise already, nothing he does will make sense. He's not looking at the next 5 years, and that's the problem. That a value investor is looking back And people like us who are growth are looking forward.
The CEO of Sony said something really awesome. He talked about this thing that happens in big companies when they get really, really big. And he calls it the rowboat mentality. He says you're moving towards the future, but you're looking at the past. That's what these guys are doing. These guys are rowboat mentality, looking backwards, moving forwards, expecting this to equal what's in front of them. And they're missing out on so many opportunities. And people listening to them are also missing out on opportunities while also thinking they're right.
So, Carlos, what is the final score? Have we won?
How much have we won? On my scorecard, I have Freelancer Finance at 9 and Everything Money at -10. With everything that we've said, I really love to sit down and debate with these guys about it. And I do think that we can win them over.
At the end of the day, we're actually watching your channel. We're still a fan of all YouTubers, by the way. I don't want to be like, this is not beef, right? But yes, we would love to talk to you. Please come on, or we'll come on your channel and let's discuss point by point, just like we're doing, and see who actually wins, without you calling us idiots, of course.
Right. And we want to see you hit the button.